Hello everyone and welcome to today's edition of my SPY review. Been in and out today. I had to leave for a while. I did make a SPY trade this morning. It was going okay, and unfortunately we got some news out that kind of made it go against me, and I ended up stopping out. I got in right about here, right after this doji candle, so right about the beginning of this candle. This wasn't one of my typical entries, but I was following another trader and I went in light. It was only 2 contracts. I think I paid $1.15 a piece for them, so I wasn't in it for that much. It went up. I was doing okay up here. I was, it was Monday's expiration, so theta started to come into play here. I paid $1.15. I think when it was down here, it was like 80 cents, 85 cents, something like that. Probably about 85 or so, 90. And it started to pop back up, and I was actually up slightly here. I think it made it to about $1.20, so I was only up a couple cents. And I was kind of watching this, and I didn't like the rounded. I didn't really like the rounded top here, but I was still holding, and I was actually right about this level. I was pretty much even, but I was waiting to see if we get a pop to the upside. We'd get a big red candle followed by a big green, followed by a red, and then right here, when this candle opened. I don't know if you remember, about a week or two ago, I was talking about seeing some fluttering action, and that's usually a sign it's going to take off, usually in the direction that it's already showing. And the candle was red. It was probably about here, so the candle was slightly red. I started to see that quick, like I guess you call it like a quivering action, and I almost bailed out right here because I thought something was up. I didn't like it, and I decided to go ahead and stay in because it was only 2 contracts, and within maybe 5 to 10 seconds the bottom fell out. And I guess there was some kind of news about Brexit vote, so that kind of really put a damper on that trade. But I saw the same thing I saw before that I talked about. It's like a fluttering, real quick quivering. You saw it, price just bounced real quick, right in this, up and down real quick like this. And usually when it does that, whatever color that candle is usually the way it takes off, and that's what happened. In hindsight, as soon as I saw that, I should have bailed out. But it was only 2 contracts, and I was waiting for the sell signal from the person I was following, just to try to mirror what they're doing. They ended up bailing out at 90 cents. I hit the sell button probably about, I think it was just after it dropped below this, and it sold about here at 80 cents. So yeah, what is that, 35 cent loss? That's about a 30% or so. But it was 2 contracts, so it wasn't that bad of a hit, but nonetheless it's still not good to have a loss. Right after I sold that, I left. I had some things to get done today, so I left. So I wasn't around for any of this, and I just got back in right about probably about an hour, not even an hour ago, so probably right around here. So I missed all this, but I don't really see a lot. The only thing I really see is we have what was yesterday's high right here. We came down and bounced off of yesterday's. Yeah, that's yesterday's high. We came down here and kind of bounced off of yesterday's high, and still not really any good reversal candles. Anything I really liked that I saw. I did kind of like this candle right here. I would have liked to have seen it come down just a little bit lower. I thought about, I was already in the trade at this point, but if I wouldn't have been, this is a point where I may have bought. I thought about adding, but I would have liked to have seen it come down a little bit lower. We had R1 support here, along with the 100 simple moving average. So I did, this wouldn't have been too bad of an entry if I wasn't already in. Like I said, I thought about adding to it. In hindsight, if I would have, I probably would have got out and made money, because I would have brought my average down to, I don't know, maybe $1.05, and we were about $1.20 up here, so I would have had 10%. I probably would have taken at least one of the contracts off up here. It would have worked out better in the end, but I was looking for this to come down at least to this line. I was kind of hoping it would kind of ride here and pull back, and maybe right about here come down and just touch these lines right here, and that's kind of what I was hoping that would happen, but it didn't. That's about it. There's not much more I see here. This yellow line's today's open. We came up close to that right here, but other than that, support and resistance lines didn't really follow. At least my support and resistance lines didn't really do much today. We kind of held the 100 right here for a while, and I thought about getting in calls right here, but I just walked in the door, and I like to kind of settle in and watch the price action for a little bit before I jump in. I don't like to just sit down, turn the screen on, and say, oh look, we're holding this level, let me jump in. But I did kind of like these levels here, just because it was holding this for a while. And in hindsight, that would have been a good entry to enter, enter right around here. But it is what it is. My snap calls that I played last night at the close. Let's take a look at that. It was a paper trade. Wow, I haven't looked at this chart since this morning. Would have been real nice. I paid 27 cents for them. I sold them I sold half. I had 10 contracts, paper trade. I sold half at 31 and the other half at 33. So my average was a 32-cent sell from 32 cents from 27. I think it was like 18.5%. So that was a good trade. I sold the first half at 10.02, which would have been shortly after this candle opened. I sold the first half of them. Not really any particular reason other than I already had a sell order set at 32 cents. It wasn't because I hit any particular levels. It was just I had a sell order at 32 cents. Half of them sold. Then as soon as they sold, I set the other half at 30. Actually, I had 31 cents on the first half and 33 on the second half. I set my sell order at 33. Kind of looked away because I was watching SPY, and these ones sold. So it ended up being like an 18.5% win, paper trade. But I don't like holding overnight, so that's why I was paper trading it. I'm trying to get a little bit more confidence in the overnight holds. I just, like I said, I think yesterday, 8 o'clock at night, some news comes out and the market crashes. I don't want to be sitting there not being able to do anything and have all this money, not all this money, but have my money tied up in something I can't do anything about till the next day. So that's why I don't like holding overnight. That's about all I did as far as trading. This chart you see here, we held this 100 pretty good today. Didn't hold it here, but it held here, fell below it here, and it held solid here. You see yesterday's high right here, we popped above that on this candle, and that's where it took off. You see this pivot here, we kind of had a little bit of slowdown, lost some momentum right here, but then this candle here got a little volume pop, and it shot up. Right now, those calls are trading at 35 cents. So let me check I have it on my other computer, so let me check and see. The high was 36, so yeah, I could have got 36 cents out of them, but I ended up with 32 average. I'll take that. I could have got another 10%, but if we all knew that, if it was that easy to figure it out, then we'd all be rich doing this. So I get 18.5% on them. I'm happy with that. Would have been nicer if it was real money, but it wasn't. But that's why we paper trade. So I think that's about it for today. I don't really see much in here. Just a lot of back and forth, real tight range. Not real tight. I mean, if you play these just right, you could get a nice profit, but it's not really following support and resistance levels. So it's kind of hard. You see here we kind of had a little bit of a wedge right here, a little bit of a wedge, and this candle here broke that wedge, but it's not following the support and resistance that I monitor, and I'm not going to just jump in just to jump in. You know, maybe I'll jump in later today, but I'm probably not going to do that. Certainly not holding anything over the weekend. Let's take a look at the daily chart here for SPY. You see it's a little bit of a kind of a hanging man candle here. I talked about this the other day. I don't put a lot of stock into no pun intended. I don't put a lot of stock into the hanging man candle. Same with the inverted hammer candle. A hanging man is a bearish candle, but it closes near the high, which just doesn't, it's counterintuitive. It just doesn't make sense to me. So I don't, it's the same with an inverted hammer. Inverted hammer closes near the low, but it's a bullish reversal candle. Doesn't make sense to me. So yeah, this is close to a hanging man candle. Hanging man can only happen at the top of a run. You can't have it at the bottom of a run. If it is at the bottom of a run, it's actually a hammer. The opposite of a hammer is a hanging man. So that being said, hanging man usually is a bearish reversal signal. But who knows? There's still an hour and a half left. You know, we could end up coming up here and closing higher. That could change things. We don't know what it's going to do before the close today. Stochastics are coming up. That's a good sign. Volume seems to be a little bit lighter today. As far as what to expect over the weekend, I'm not real sure. It's kind of we're kind of in the middle, you know, still in no man's land. I know yesterday I said that I thought we would be green today, which we are. Even though yesterday was still kind of a no man's land candle yesterday too. Kind of the same thing today. If we end up closing above the open today, and this ends up being a green candle, and maybe we'll go green Monday. If this stays kind of as it is, as a hanging man, then might see a little bit of pullback. But again, I don't find, at least in my experience, hanging man isn't that reliable. So I don't think I even have him set the flag hanging man over here. Let me see. Yeah, I don't even have him set the flag. There's a hanging man. Yeah, it's not flagging it as one, but let's see if you can see this. I know we did this a couple weeks ago, and it doesn't show up. When I click on this, the little box doesn't show up. Now, I did show the other day. I tried it again, but I forgot to go back and watch the video to see if it did show up. Anyway, there's a little box right here. I don't know if you can see it. There's a little box here that has a little illustration of the hanging man pattern and gives a little explanation. If you can't see the box, there's a little picture right here, a little image, And down here it says hanging man is a bearish trend reversal candlestick pattern, which is a candle of specific shape. The trend reversal can be predicted if occurring after the uptrend. This candle has a short body located in the top half of the trending range or trading range, absent or very short upper shadow and long lower shadow. So that's pretty much, this here is pretty much a hanging man. Even though it's not flagging it as one, it's pretty close to one. But again, I don't put a lot of faith in hanging man pattern. Same with inverted hammer. I just don't. It just defies logic for me. If you ask me, a candle that closes near the low, what would that indicate to you? Well, it's probably going to keep going lower. Well, not necessarily true by definition with an inverted hammer. It means it's going to go higher. I don't follow that logic. So nonetheless, we're looking at what looks like a hanging man here. Let me see if I can find any other hanging man candles. Let's see. This would be, we're not at the top, really top of a trend, but that's not really hanging man anyway. Remember, we're looking near the top, or if we're looking for an inverted hammer at the bottom. So this would not be an inverted hammer. For one, it's the top of the trend. Inverted hammer has to be at the bottom of the trend, so that's not an inverted hammer anyway. This here looks to me like a shooting star. It's a bearish hair to me. Still looking for probably a hair in me because it wasn't high enough to be a shooting star. Let's see. Keep going here, see if we can see one. This will be close to an inverted hammer, but it needs to be down lower with less of a tail. This body needs to be a little bit smaller to be a true inverted hammer. And if you look, actually, hammer candles aren't very common. Very rarely see hammer candles. You would think you'd see them more often, but yeah, they're not that common. So let's see, what's this one? Yeah, this just kind of shows you how uncommon these candles actually are. Yeah, I'm not seeing anything else that looks like it would be a hanging man pattern. But anyway, that's kind of what I'm seeing today. I wouldn't be holding anything. I'm not going to hold anything over the weekend. I know that. Back on the 5-minute chart, we see a pullback. So we come down and hold this 100 simple moving average. We hold it and bounce off of it. I don't like the stochastics pointing down on all 3 time frames. That tells me we're probably going to keep going down. It's probably not going to hold that 100. So let's see, we'll watch it for a few more minutes. And I changed this, and we're still not done. I must have never saved it when I opened it back up. It still showing a slow stochastic. Change that to stochastic full, because I did change. I was using the slow stochastics, and I changed that, but I never saved it. So when I opened up my thinkorswim the next time, it reverted back. 5, 3, and 2. Change this line to purple. I think that's right. Oops, nope. Let's get that off of there. Change that to white. Yeah, there we go. Do the same thing over here. I'm not going to pull this completely out. I'm going to leave it up here just in case I decide later on I want to go back to the slow. It's already set up. I just have to fill the check marks back in. I don't know if it uses resources when it's not actually being used. Stochastic full. Let's go in here and change these 5, 3, and 2. 5, 3, and 2, make this white. And there we go. Now I have them all set to the same thing. Now I have to go back up and save this again. Remember how to save it. I think that's what I named it before. Yeah. Overwrite it. Okay. So we did bounce off that 100 simple moving average. You see the 3-minute EMA. Yeah, see, I don't know if I like this full stochastic. It's a lot busier. At least on the 3-minute, a lot busier than the slow stow. So I'll take a look at that. I might play around it. Maybe I'll go back to the slow stow. Let's see here. Let's take that out. Put the slow stow back in and see what the difference is. We don't have as big of movements with the slow stow, but they're a lot less rapid. You see my computer's getting kind of bogged down from running all this stuff. Let's go back in and get rid of the slow stow. Put the full stow back in. See, I don't know. I use these as secondaries anyway. I don't rely on them. I try to watch the candle patterns. Candle patterns, support and resistance is my #1 thing I look for. I only look at the indicators for confirmation. Indicators are always lagging. Any indicator is going to be a lagging indicator. They take an average of previous candles. Let's just say, for example, RSI by default uses 14 periods. So in this case, with RSI for a 5-minute, would take the last 70 minutes of candles and take an average, and that's how it calculates out your RSI. So it's going off of previous history. So let's say right here, your previous history is showing a big up run, but you're falling back down right here. So if you only use RSI or use RSI as your primary, you're actually getting data from this up run when you're actually in a down run. So your indicators are always lagging, whether it doesn't matter if it's RSI or stochastics or MACD or Williams percentage, anything. They're all going to be lagging. So the most current data that you can get on a chart are your candles. They're going to be the most current. You know, this candle here is the last 5 minutes worth. And a lot of times one candle will tell you what you need to know. Right here we have a hammer candle on the 10-minute chart. Hammer candle right off of support. That's one candle that you looked at. You see one candle and you see support. Probably going to be a pretty good chance for a decent run here, or a decent entry. So you glance down at your stochastics, and your stochastics started to curl back up a little bit. That's just kind of a confirmation. I wouldn't let this determine whether or not I get in, but I like for it to coincide with what I'm looking at. So if you would have got in right here on calls, boom. Yeah, hammer candle right off of support, boom. Here we had a doji, the TTM scalp. We had a doji right off of support, and look what happened. The next two candles were pretty decent green candles. So I like to rely primarily on the candle itself, and I use my indicators. In fact, I could probably trade without indicators and probably do just about as good. Sometimes I don't even look at the indicators, but if I do, it's just for confirmation of what I see on the candles. I know when I started out trading, and even up till maybe a year ago, I primarily relied on the indicators first, and that was mainly because I didn't understand the candles as much. I waited for crosses out of oversold, or moving average line crosses, or MACD crosses. Your moving average lines, they're lagging too. It's if you use a 20 simple moving average, it takes you the average of the past 20 periods. So if you're on a 5-minute candle or 5-minute chart, that's 100 minutes of data that you're looking at an average of, previous data. But I didn't really understand the candles as much, so I had to kind of rely on this. I'd say that's probably one of the biggest improvements I saw in my trading, was learning candlesticks, learning what they meant, and learning how to read them. And that kind of, I can see reversals now way before the indicators tell me they're coming, or they might come. So if I could give any advice in that area, learn your candlesticks. I read books from Steve Nissen, and he tells you, you read his books, watch his videos, he'll tell you that you're going to see a reversal with a candlestick way before you're going to see it with an indicator. And a lot of times that's why I lost money trading on indicators. By the time an indicator would signal, let's say we had a cross, let's see a moving average cross. By the time I got the moving average cross, the run was halfway over. This was a pretty big run here, but let's say some other run, this one here, we had a cross right here, as this indicates. We had a cross on this candle, so your entry would have been at the opening of this candle, which isn't a bad entry, still would have been good. But if you wouldn't have got out here, it would have pulled back. In the end it still would have worked, but your moving average crosses, look at this one here. We had a moving average cross right here. This run was already done. If you would have got in on that moving average cross, you would have probably stopped out and lost money. And that's what was always happening to me. I was trying to get in on crosses, on moving average crosses, or MACD crosses, or crosses out of oversold, or overbought, whichever way I was trying to go with it. And by then the run was halfway over, 2/3 over, and I was missing a lot of it, and that my risk reward was just out of skew. So you start using seeing signals, candlesticks. Like I said, this one here, you see one candlestick, tells you hammer candle, boom, hammer candle off of support. That's all you need to know. There's your winning trade. So definitely learned candlesticks. I didn't know them that well the first few years I traded. I didn't see the importance of them that much. I probably didn't see the importance just because I didn't understand them that well, so I kind of made myself think that they weren't that important. In the last, I'd say, year or two, I really put a lot of focus and emphasis on learning the candlesticks, and that's kind of made a big difference in my trading. So if you're kind of like I was, and you don't, and the longer the more experience I get looking at the candlesticks, the easier I spot them. Yeah, I have the little cheaters in here. There's bearish engulfing here. I have little cheater arrows, but I can glance at them and see, even without this here, I knew this was a hammer. Which hammers are pretty obvious, but you just start seeing them. They kind of stand out. They stick out, and you see it, and you're like, oh, wait, that means it might reverse here. That's something I should probably check into. When I first learned them, I read the books, watch the videos. In the first couple of months, you're like, well, I think that's what that is, but I'm not real sure. And then after a while, you start to get confidence. You notice them quicker. And I don't know if we had news or something here now, but we got a nice pop to the upside here. Let's see how the daily looks now. Really wish I had another monitor or bigger monitors. Yeah, see that candle on the daily turned green now. So see what how we end up closing. Might next week might make a push for this high here. I don't know. Let's see. I'm still not holding anything over the weekend, but that's a nice big pop. Like I said, we bounced right off of this 10-minute, or this one right off this 100 simple moving average. Came down and touched it. The stochastics were curling down. I kind of thought we might pull back even more, but it didn't. We didn't really get a reversal candle per se. We do have a longer tail here, but it's not an engulfing. It's not a hammer. It's not anything that says a reversal. Otherwise, this would have been something I would have looked into a little bit more. If this would have been a bullish engulfing, or would have been a hammer, or would have been a piercing line or something, I might have looked a little bit heavier, but it wasn't any per se reversal candle. I did note here, and I mentioned that it held this moving average line for a while here, so it's kind of honoring that moving average line. When it was here, though, I kind of, all the stochastics were starting to curl down out of overbought, so I kind of thought we might pull back more. But anyway, that's it for today. I'll see you guys next week, and check out my other videos and make comments, questions, whatever, and I'll see you next week. Thanks. Bye.